Now, chart patterns are well documented in technical analysis literature and are based on the psychological phenomena that occur between the buyers and the sellers of financial instruments in liquid markets. Well, that's another mouthful, isn't it? Well, sometimes when I write this stuff, I get a little bit too wordy. Pattern formations do not form a trading system, but rather provide an indication of the future trend of a share or an asset as it breaks key psychological barriers in the forms of support and resistance lines. Okay, we're done with the complicated stuff. We'll talk easy now. So I'm sure you have heard about chart patterns for online trading and their relation to technical analysis. You've probably heard about double bottoms and triple tops and head and shoulders and rectangles. So in order to have a complete understanding of chart pattern trading, we should also gain a good understanding of one of the most common on-chart formations. What I'm referring to are the triangle trading patterns. So in this webinar, we're going to discuss the basic triangle formation in some ways to properly identify and trade these patterns. So let me pop up a live chart here for you. Okay, what you have on your screen is what I call market structure. These are all the different patterns that we see normally during a trading period. We have, and I'm going to start at the left. We have double bottoms, bull flags, bull pennants, ascending wedges, descending wedges, triple tops, bear flags, bear pennants, inverted head and shoulders. We have inverted cup and handle. We have expanding wedges, cup and handle. We have head and shoulders. You can go on and on and on, but there's only a handful of leading patterns. Okay, and a lot of them are very similar. But if you get stuck like most people do when they're starting to learn to trade by memorizing these patterns and memorizing what you're supposed to do when you see these patterns, you end up just like a Japanese candlestick trader. He's memorizing what 3 white crows are, and he's looking for that to appear on his chart. And when it does, he thinks, I got to do this, this, and this. Well, most of the time he's wrong. Okay. Now, there are some patterns that have what we call characteristics, but I've studied these characteristics. And so like a bullish flag tells you that the preceding direction of the trend, which was up, will, when it breaks out of that, will continue upward. Well, if you want to see that bullish flag and then make your trading decision based on what some set of rules told you, you're going to end up losing out. If you throw those characteristics out of the pile and you say, when I see this pattern and then I see a breakout, I can then make some assumptions to make a trade. Now tonight we're talking about triangles. And we call triangles, or triangles fit into several different triangles. Okay. We start out with the most popular, which is, which looks like this. This is called a symmetrical triangle because both the upper and the lower support and resistance lines are moving at the same degree. Then we have an ascending triangle. We have a horizontal line and a line converging on that. Then we have the exact opposite. And everybody says these have characteristics. We have a symmetrical, asymmetrical, and ascending and a descending triangle. Well, I say throw all of that out. Take this, 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 are all just triangles. What did you learn in elementary school when you learned about triangles? This is a triangle. This is a triangle. This is a triangle. This is a triangle. This is a backwards triangle. They're all triangles. Triangles, what do they have? They have 2 axes moving at certain degrees that will eventually converge on each other. So a wedge is basically a triangle that has the axes at different angle degrees. Because remember, symmetrical triangle, both are traveling at the same degree. And ascending and descending, one is horizontal and one is running up the movement. A bullish pennant could be called a symmetrical triangle, but they call it bullish pennant because it appears in the middle of a uptrend. Still a triangle. So what we want to do is simplify this, because knowing what they are doesn't help you with your trading. And believe me, I've studied the characteristics. And even if I were to, well, I'll show you at the end of this class, but if I were to trade everything based simply on the characteristics, I have studied ascending, descending, and symmetrical triangles, 600 different triangles that appeared. And I found that the only difference is 48% to 52%. That the characteristic actually does what it says. Well, you start out with a 50-50 chance anyway, because all we're concerned about is price breaking out of that formation. So in other words, if price moves, we can draw, in this case, we have price moving net. So we're drawing a resistance line above the top and a support line below the bottom of prices. The two lines are moving at fairly even degrees, and they're converging right here. But I don't care what the degrees are. I'm not measuring them. And price is moving in between these triangles, moving towards that apex. The fact is, that doesn't have any good information for us until that price breaks out of this triangle. We have no idea what's going to happen. Now, we could say, because this came off of a very solid uptrend, that it's going to have a bullish characteristic, but I don't know that. It could have a bearish characteristic just as much. All I want to do is be prepared for the breakout. I also want to eliminate false breakouts and false jumping into making trades. So first I have to recognize a triangle. And triangles appear in our charts all the time. They're a very prominent pattern and a very reliable pattern. Here we have a triangle. See the brown lines? I got too much garbage on this chart, but see the brown lines right here? Moving in, and it doesn't look like it's symmetrical, but it's not ascending, it's not descending, but we have two angular lines moving towards each other to converge in an apex. Now, as the price moves in here to the apex and it breaks out upward or downward, we can then prepare to make a trade. But it was easy to see there's not complicated rules for drawing the support and resistance lines on your chart. Here we have a beautiful triangle formation, easy to see. We have the breakout here, and we could have made a successful trade. Here, again, we had the same thing with a beautiful breakout, and these are actually live charts. And we could have taken advantage of that market move also. Here we have a beautiful ascending triangle. But I don't care that it's ascending. I only care that price is moving into the apex between my support and resistance lines in a triangle formation. I can't make any decisions until I get a breakout. Now, breakout is the first step in beginning. That's like an alert in the back of your head saying, hey, there's an opportunity here. But you don't simply just jump in and take a long trade because it broke out upward. A lot of times it moves right back into the triangle. A lot of times it doesn't move anywhere. It goes sideways and then goes back the other direction. We get lots of false breakouts. So there's a couple of clues we're looking for. Okay, the first thing we get is what we call the breakout candle. That is the candle that closed outside of the triangle. That's easy fun, but it hasn't told you. You are not doing anything yet. Then we get the confirmation candle. That's the next candle that forms after the breakout candle. Because if that candle stays out of the triangle, that's confirmed the breakout, and then we can get ready to trade. Now, there's some simple rules about a triangle, not that I came up with. They've been around forever. They are used by all the traders I know of, that you can judge the breakout distance based on the width of the base of the triangle. So if price broke out here, the move should be equal to this base. Okay. But we have a problem because we have a very strong resistance level right here. So we could use the breakout of that base as our second target, but first we have to get through that resistance level. Okay. This is very important because in order to make any trade at any time, you have to be able to set your target price and your stop loss price in order to calculate your risk management. So like in this case, we were able, this price able to come up here. It broke the resistance, came through, then up a little bit higher, but then eventually never made up to the second target, but eventually came back down and went back into Never Never Land. But we could have made some nice profit from that move to that move. Now, what we would use is the swing low of the lowest low, the swing low, before the breakout candle to set our stop loss, and we'd go a couple pips below that. Again, our target is the width of the base. Except is recalculated and see based on our first target. Our buy point or our entry point would be equal to the close of the breakout candle, so that when that third candle generates, as long as it is above the breakout, the close of the breakout candle, we can then generate a trade. So we have an entry point, a stop loss point, a target point. Okay. Now we can go set this up with a limit order, not a market order, because now we have the breakout, we have the second candle, we're ready to make the trade. So we can set it up as a limit order, giving the price that we're willing to enter the market, putting our stop loss or take profit point, and maybe you would want to use it with a adjustable stop loss, or you may want to evaluate your stop loss if it moves up and breaks through that resistance line. And maybe you'll move your stop loss to that resistance line. So if price ever falls back down through it, okay, you're out of the market and you've got your profit locked in. So let's go back to my PowerPoint, and we're going to go through this step by step by step. Okay, so here we have a beautiful symmetrical chart pattern. But again, we don't know for sure whether it's going to break out upward or downward. So we can prepare ahead of time because we know what the base is. And all we have to do is drop that on our charts and wait for the breakout and determine what we're going to do based on that breakout position, which way the breakout is, whether it's a break up or a break down. Then, of course, we have the ascending and the descending triangles. Okay. They look really pretty on creatives, But when we're looking at trades, and that's why I try to show you on charts, it's not as clean, as simple as a C. So what do we have in this case? We might want to call it a bullet pennant, but I see simply a triangle. Get a breakout. In this case, we would set our target based on here. And they say you can set a second target based on the beginning of that move upward here, or based on where your resistance is. But still, target one is the only thing you can use to track your risk reward ratio. So what do we have? We have symmetrical triangles, we have rising wedges, we have symmetrical triangles, we have bearish pennants, we have increasing expanding triangles. They're all the same thing, all triangles. So let's not overcomplicate anything. Let's make it clean and simple. Two lines moving at different degrees or same degree to form an apex. So regardless of what we're going to define the triangle for, is we're going to look and wait for the breakout. Now price will hit that triangle. A lot of times you'll get a high outside the triangle. You might even get a candle outside the triangle above or below, but you won't get the confirmation candle. So like here, we got a breakout candle. So it was giving us a break up. So it was a buy scenario. We could use instead of stop loss, but we don't have a target point. We don't have a confirmation candle, and we don't have an entry point. So what do we have to do? We have to wait for the next candle to close and make sure it closes outside of that triangle. And then we would enter on the third candle. Now, lots of people say, why? That's waiting too long. I only want high probability trades. I don't care how many trades I have to throw in the trash can, as long as I haven't lost money. Okay, I can set it all up. If it doesn't follow my rules, I don't make that trade. There's always a trade to be had. So once a triangle is identified on the chart, traders will wait for a breakout either above the resistance trend line or below the support. After a breakout is confirmed with either a closed candle above resistance or below support. And what's support and resistance? It's the two lines of the triangle. You would place a stop is placed approximately 10 pips below the last swing low of the triangle. A limit equal to the height of the triangle is then placed. So here we have it all on our chart. So here is our breakout candle. Here's our confirmation candle. And see, this happens to be a confirmation in the opposite direction. It closed lower than it opened. It's a red candle after a breakout in the green, or in this case, blue direction, but it's upward direction. We don't care. As long as it closed outside of the triangle, that gives us our confirmation. And then we would make our entry on that third trade. We would set our limit based on this width, and our stop loss 10 pips below the swing low, the lowest swing low right before the breakout. So we do the same no matter which way the triangle is forming. The key at all times is waiting for that second confirmation candle to be closed. It is so important because that's what stops you from making false signals or bad trades. Okay. This isn't saying that your trades are 100% successful. Long shot, but it moves the odds very far in your favor. Okay. So you might give up some pips because you didn't enter early enough on some people's strategy, but I would rather have a few less pips in profit than more pips in losses. And remember, your stop loss is closed 10 points below or above, depending on which way you're trading, the swing low before the breakout candle. And here we just have the opposite movement. But the critical point is where to set your entry. Your entry set based on the close of the breakout candle after the confirmation candle has closed. Now, I mentioned earlier, I've done a study, okay? And because I want to move the odds in your favor. Okay, now there's two things that I didn't mention, or one critical thing I didn't mention. Before you ever execute this trade, you must look at volume. If volume or momentum, whichever one you prefer using, has not moved in your favor. In other words, when you have a breakout and then you have a confirmation candle, by then you should see other traders increasing their position or jumping into the market to trade. If they're not, they're probably seeing something else than you are. If you don't see an increase in volume or a change in momentum, a climb in momentum, sit back and wait. It's probably a false breakout. So while there are instances when symmetrical triangles mark important trend reversals, they more often mark a continuation of the trend. Regardless of the nature of the pattern, continuation, reversal, the direction of the next major move can only be determined after a valid breakout. Now, what is ultimately important is number one is the quality of the trend. Now, I didn't tell you had to find trend lines, but when you are looking at a triangle, let's go over this back to my live charts. You see here, we have a nice clean movement. Push, ease, push, ease, push, ease. Higher highs and higher lows. We don't have something like that. Because price moves in all kinds of ways, and price can be moving up steadily, but not making a nice trend. In other words, you have a kid running around in circles that happens to be growing at the same time, but he's uncontrollable. And then you have another kid who's well-behaved, learning, controllable, building more respectful manners, increasing his stuff in school because he's learning and growing steadily in his height. Okay. Now, one of those kids could turn out to be a president, but the odds are the other kid is easier to project and is going to be easier for us to determine because remember, price is totally random. No one can predict what the next price is going to be. It's made up of millions of human beings making millions of trades all over the place, or investments, or buying and selling, supply and demand. And it's made up of news and headlines and fundamental and technical analysis, all kinds of stuff. But there are certain times that price exhibits non-random behavior. That non-random behavior is known as a trend. When we can actually see a trend, and a trend is a series of higher highs and higher lows. When we see the price falling in line, and it may be a short period of time, it may be a long period, because most of the time, price moves in sideways, choppy messes. But when we see a triangle, and we see a well-developed triangle with a nice, well-developed trend of, in that triangle, the higher the quality of your trade will be. And that's very important because what we are looking for is only high probability trades. Okay. See this mess here? I probably would have never traded it. It was a sideways, downward, nothing crazy move. Even though it did everything it should have done, there was no quality to this trend. Here, push, ease, push, ease, push. And we're waiting for an ease, but we didn't. We got another push, and it still continued to push and ease. we had a nice developed movement. We could see a rhythm in that price move. Here, okay, I don't know if I would have traded this one if I was looking, because here we had this big drop. We had the push up, we had the ease, push, ease, but it is an ugly mess. But if I scroll it out a little bit, it looks a little bit better, but it's still no quality of that movement. So the quality of the pattern is very, very important for your success. And the only thing any of us care about is your successful trades. So the trend is very important. Volume, as I mentioned, also is the last kicker in this whole little decision making. As a triangle extends and the trading range contracts, volume should start to diminish. This is referred to as the quiet before the storm, or the tightening consolidation before the breakout. And then at the breakout, we should get the exact opposite. We should see volume start to increase. Now, breakout direction. The future direction of a breakout can only be determined after the break has occurred. Sounds obvious, doesn't it? But attempting to guess the direction of the breakout can be very dangerous. Even though a continuation pattern is supposed to break out in the direction of the long-term trend, this is not always the case. That's what I'm telling you when we talk about characteristics. A break should only be on the closing basis for it to be considered valid. Some traders apply a price break of 3% or time. Okay, in our case, we're looking at time. We're not looking for date, but we're saying our confirmation is our second breakout candle. The breakout should occur with an expansion of volume, especially on an upside breakout. Now be aware that after a breakout, either up or down, the apex can turn into future support or resistance. The price sometimes returns in the apex or a support or resistance level around the break before resuming the direction of the breakout. So this is one of the reasons you set your stop loss 10 points below the swing low. Because a lot of times you'll get your breakout candle, you get your confirmation candle, and then price will ease back down sideways, and then it'll start getting the momentum to move up. And then, of course, price targets. We talked about price targets, and it's very important not to blindly use that target without looking to see where the next major support or resistance level is. So in sum, triangle patterns are easy to spot and provide a good risk-reward opportunity. Traders can quickly know that a big move may be near, as well as the profit objective and the amount to put at risk. Now that you have the knowledge of these three powerful price patterns, you are steps closer to becoming a more confident trader. So thank you very much for joining us tonight. If you have questions, contact Alvexo or go to the Alvexo Education Center. And we have videos, webinars, everything for you to learn more about triangles and chart pattern trading. Or use our live chat button and you can talk to an analyst. Thank you very much for joining us and have a great trading week. Bye now.